Hi, I'm Mike Taylor, PiFund CIO. Well, May was another very strong month for global markets. Headlines, of course, were still dominated by Iran, oil, geopolitics, but markets increasingly looked through the noise. The war now appears closer to some form of resolution than it has for some time. Oil prices eased from its highs, and investors have moved quickly back into growth assets. The result was a pretty powerful rally, led once again by AI. Semiconductors were the clear winners, with the likes of Micron, one of the standout names. What was once seen as kind of a cyclical memory business, these companies are now being treated as a critical part of the AI infrastructure build-out. And the shift has really been quite remarkable. So for most of this cycle, the AI trade has been very concentrated in hardware, chips, servers, memory, and data centers that have led the market. But in late May, we finally started to see that rally broaden out back into software, and that really matters. Because a narrow rally can last for a while, but a broader rally is much healthier for the market. For Pi, the standout performers for the month were both the UK and European fund, and also the Australasian Growth Fund, which both rose around 7% for the month. The strength came from a mix of AI infrastructure, industrial technology names, defense, and selected software names. Looking ahead, the big question is pretty simple. Could we still be early in this rally? Well, Fidelity's Denise Chisholm has compared this market more to 1996 in the dot-com era, rather than the late stage excesses of 99 or 2000. So today's moves may seem large, but they're actually quite insignificant versus dot-com. You know, in the dot-com boom, the NASDAQ rallied over 580% from 1995 into the peak. Whereas today, it's only up 136% since the launch of ChatGPT, which was the bottom of the 2022 bear market. And this rally is not just being driven by buybacks or cost cutting, it's being driven by capital expenditure, infrastructure, and genuine investment. Markets, of course, will not move in a straight line. We may have a correction, but the AI investment cycle is still building, earnings are still improving, and the rally is starting to broaden. So yes, we remain bullish, the cycle's got legs.